Welcome back to Beating Alpha. This is episode 90, and we have a special guest on, a very young guy, and this is going to be show all about real estate investing, multifamily. It's going to be a lot of great tips, great nuggets. So make sure to grab a piece of paper, a pen, maybe a coffee, and let's get this going. So I want to introduce you to Bailey Kramer. So he's a real estate investor and entrepreneur. He's the host of Real Estate Investing Made Simple podcast that you can find on iTunes, I'm sure, and a founder of a Greater Orlando multifamily meetup group. Bailey focuses his efforts on multifamily in the Central Florida area. So Bailey, appreciate you joining me today.
Yeah, absolutely. Super excited to come on and happy to share.
Good. Again, as I asked you before, 20 years old, man, 20 years old. I mean, it's very young, to get involved at this age in real estate. Because I remember when I was 20, I didn't do anything cool like you. So can you share your personal journey, man? When have you discovered this real estate business and multifamily business, and how did you get involved in it?
Yeah, absolutely. So I come from no real estate background. My family never talked about real estate, didn't own any real estate. But what kind of connected me was I've always had that entrepreneurial desire. I've always wanted to create my own destiny, control my time, and create a nice life for my family. I just didn't have a passion to connect my entrepreneurial desires to up until last year when I read the book Rich Dad Poor Dad, which I'm sure many of your listeners have heard. And that book was the first introduction to real estate investing. And this is when I was a sophomore in college when I read that. So it was still in the middle of me figuring out what I wanted to do. I had no idea besides I want to start my own business. I want to be in control. I just didn't know what that really looked like. So after reading the book Rich Dad Poor Dad, I decided to look a little bit more into this real estate investing thing because he mentions it in his book. He touches on it. So from there, I went to Bigger Pockets, which I'm sure many people are familiar with as well, and just did a bunch of learning from podcasts to their webinars to the forums. I was just consuming knowledge because everything was brand new to me at the time. I went from literally knowing nothing to where I am now. And it was definitely a journey getting to the point where I'm at now and deciding multifamily. But I started out learning about fix and flips, then wholesale, and one thing led to another. And I can go into more detail, but multifamily had these economies of scale and a lot of the attractive things that people like about single family, but in multifamily, a little bit more scalable, more teamwork. You don't have to bring all the pieces to the table. So those were a few things that really hooked me in, and now it's kind of history.
Yeah, well, the kind of history continues from here.
Yeah.
It's just like 20 years old. I'm just coming back to that point. I mean, for somebody of you who are watching this, and maybe you're kind of same age as Bailey, but for me, it's like, wow, to get involved, to pick a book, like Rich Dad Poor Dad, which I don't know who handed you the book, or maybe you came across somewhere, in contact with this great book, but that give you a lot of insights. And, like I need to follow, like real estate. But have you looked at other options besides real estate investing? Because, I'm sure there's a lot of people watching and thinking, oh my God, there's all these different available sources like stock trading, investing in real estate, like passively, actively flipping deals, and, multiple things, development. So have you came across like a few options, and why do you have decided to stick with the multifamily?
Yeah. So when it pertains to just real estate, when I had my focus on real estate, there are so many options. You're totally right. You can have hundreds of different strategies, but the main ones, fix and flip, that many people are familiar with, wholesaling, multifamily, commercial, office, retail, you can just go on and on and on. Multifamily was one of those things where it's housing, right? Everyone can understand. It's just where people live. And that was a very easy thing for me to understand. I don't really understand industrial space. I've never had experience with industrial space. I don't know anybody in industrial. Same thing with office. I don't work in an office. I've never worked in an office. I don't understand any of those details. But when it comes to housing. Everyone's lived somewhere at some point, and that was really easy for me to understand, especially on the single family side, because I've lived in a house or an apartment for all my life. So it was just super easy for me to understand. And then when it came down to the business side of it, it was, for me, single family, understandable, multifamily, understandable. Now, okay, which one aligned with my goals more of going bigger, faster? And that was multifamily. So kind of talking to people as well, hearing their experiences. I've talked to a lot of people that said, hey, I'm doing multifamily now. I did single family for 15 years. I wish I went bigger, faster, sooner. So I took a lot of tips from other people and learned from their mistakes, their regrets, things that they just wish they did differently, and aligned them with my goals. And multifamily was kind of that perfect entry starting point.
Got it. So have you used to, as I understood, you used to own the single family properties also?
No, so I never owned any single family properties, but
Okay.
it was a ton of learning about them
All
and
right.
talking to people who did own the single families, who did,
Yeah.
because
And it's
because
like, don't get involved with it. Yeah.
well, yeah, and don't get me wrong, there's nothing wrong with single family.
Sure. Yeah.
It just comes down to your goals,
Yeah.
what's going to get you there. It's all personal preference. That's what I like to tell everybody. There's no right or wrong, but with my goals and my conversations I had with people that were in places that I wanted to be in, it
Mhm.
kind of led me down to the path that I don't need to start with single family, and I don't want to start with single family. So that's kind of why I transitioned my focus to multifamily.
Exactly. Well, why go and invest into single family properties and again make those mistakes, which of course, as you said, you heard the horror stories of people managing their own properties, tenant issues, toilets, all termites, all that fun stuff, right? It's like, why can't I just skip it and go to the commercial right away? So
Yeah.
so talking about that again, there's a lot of education when it comes to like multifamily and commercial property rather than like single family deal when it's easier to buy. Maybe again it's maybe tougher to manage, but can you learn about your experience like when it comes to educating yourself about multifamily investing, and what resources have you looked at or consuming right now to kind of learn what it takes to invest into multifamily?
Yeah, absolutely. So the two biggest things in my mind is education and networking. Without those
Mm.
two pieces, it's nothing. So education is something that I've been super focused on. So in the beginning, it started with Bigger Pockets. It was literally probably a month or two of just listening to all their podcasts, all their books, their webinars, all that stuff. When I decided to transition to multifamily, it was a ton of different things, but all multifamily focused. So that was one person that I follow and I still follow is a guy named Grant Cardone. Are you familiar with him?
Oh yeah, 10x all the way. Yeah.
10X. Yeah. Yeah. So, and I have his book here as well.
Hey, here we
But
go.
yeah, so Grant Cardone is someone that I follow. And that's kind of just one resource. But another one is mentorships and coaching programs. So I found my first mentor named Kyle Marcotte, and he's a young guy, a few years older than me, who was doing it. So making it happen. So, learning from people who have done it and learned a ton from him. There's also a ton of good books out there. Let me try to think of some of the best ones I can think of, because I don't just read multifamily books. I read a lot of mindset books, The Go Giver,
Hmm.
The Richest Man in Babylon, those types of books. But I think another huge factor, and I think you experience this as well, is starting your own podcast. You learn so much from everyone that you bring on and just talking through ideas. So that's a huge education piece. And then the most recent and most substantial thing that I've taken on is a mastermind group. So for those who aren't familiar, simply put, it's a group of like-minded people who are after the same thing. So I'm in a mastermind group called MIH Mastermind, and there's about 30 people in it. Everyone has the goal of multifamily. There's people who are not in it full time. There's people who are in it full time. There's teachers, doctors, lawyers, you name the profession, they're in the group, and we all have the same vision. So we do a lot of educating through there. And yeah, a lot of education through the mastermind group. Now, I would say that's the main source right now.
Got it. So can you talk about a little bit on networking? And again, kind of during these times, maybe we have less opportunities to do so. Again, there's a podcast opportunity, as I mentioned before, to connect with people just like as we're doing right now. But it's still possible to network and meet people for coffee. But like, can you just give a few advice, like how does those like steps begin, for the people if you're looking to expand your network? Like, what is the process behind that? Like, do you go and just reach out to people and like Facebook, you text them? Like, what do you say to those people when you want to build a network?
Yeah, that's a great question. And I just want to say, I think right now during coronavirus is the best time to be networking because everyone's home.
Yeah.
Everyone is expecting to network online. You don't have to leave your house. So although it's a bummer that you don't get that face-to-face in person, you're able to, you don't have to travel somewhere. So there's a lot more time and a lot more expectancy that you're able to network. So a few big tips I want to give. Number one, meetup groups. I've seen during COVID, I've started my own meetup group, but I could probably name 20 meetup groups off the top of my head right now. There are meetup groups, especially in the multifamily space, but going to these meetups, there's one probably every single night. And if you want to learn about my meetup group or other people's meetup groups, I'm happy to share. But in the beginning, especially during COVID, I was doing a meetup group. I was attending one every single night. Now, that doesn't really do anyone any justice because I'm just there. I hear people, and then I go, and then I guess turn off my computer because I'm already home. But the key to the networking side is reaching out to all of the people that attend the same meetup as you do. Because as you know, a cold call, it's cold, it's scary, it's uncomfortable for a lot of people. And that's because it's out of the blue, right? But something that's really awesome about meetup groups is you already have that built-in shared experience. So to kind of go into your question a little bit more, this is what I do exactly for networking and meetup groups. So after the meetup, well, actually during the meetup, I either write down everyone's name or you can just screenshot it on something like Zoom or save the chat, whatever method you want to use. But then afterwards, go on LinkedIn and message each person. And the key is to make it personal. So you want to say something like, hey, insert their name. I noticed we were both at Bailey's meetup. I would love to learn more about you and your business or something along those lines. Looking forward to connecting. That's pretty much word for word what I say to people after meetup groups. And after that, you get talking a little bit more. And then you're able to set up time to chat on the phone. And that's just one really easy strategy that you can use to not only learn while you're on the meetup calls, but to also connect with people afterwards.
Mm-hmm. Yeah, that's a great strategy. Thank you for sharing that. I think I hope a lot of people will take advantage of the strategy, which is, again, it works for you, and it definitely works. So people should go and follow that. So again, talking about the multifamily itself, as you mentioned here, like you're looking to get involved into Central Florida area. So maybe you can talk about the state itself. Why have you picked the Florida?
Yeah, so there are many, many, many markets out there, right? But some key things that help me decide, first, Florida in general. So as you said in the introduction, I'm based out of Orlando, Florida. So just to start, I didn't want to look at something in the north, in the Midwest, right? Because I wanted something that's in my backyard, that's in driving distance, that isn't out of my reach. I can feel it with my own hands. So that was Florida, right? Now within Florida, you have many, many markets. You have Tampa, you have Orlando, you have Miami, Jacksonville, and you can go on and on. But there were a few things that led me to Orlando specifically. One of the big factors was I'm in Orlando, and within each market, there's a million submarkets, right? There's little neighborhoods, there's sections. So I think a lot of people might get discouraged that, oh, I'm not in a good market. Well, maybe maybe there's a bunch of bad neighborhoods that are not the best metrics to invest in, but there's always usually at least sections of markets that are good investments. So for me, I picked Orlando because the job growth, it has solid job growth. I can't remember the exact percentages, but something I did to analyze the markets was a lot of searching on city data, talking to people, a lot of metrics like job growth, household income. Orlando's has a lot of job growth coming in, and a lot of people think of Orlando as tourism and Disney, but there's actually a lot more to it than just that, of course. But I would say first and foremost, it's my backyard. That was honestly the first initial, and then going to it further and looking at the metrics helped me kind of narrow it down even further.
Got it. So can you talk about the deals itself and your underwriting criteria? What type of deals are you going to be looking for?
Yeah. So my criteria, I'm looking for, I mean, and COVID's kind of changed it a tad bit, but B and C class, B and C plus class assets, multifamily. Right now, I'm looking to get into between 10 and 30 units. So I have a goal for myself that I'm going to have 20 units by June 2021. So between 10 and 30 units is what I'm looking for. I have the partners and the mentors and the financing from the people I know and the relationships to go higher unit counts. But it's kind of like that law of the first deal of getting your feet wet in a manageable size. So I don't think there's anything wrong starting with a single family. I don't think there's anything wrong starting with a 100 unit, but 10 to 30 units is the sweet spot I'm looking for. And another big factor is the value add component. So value add is a phrase that's thrown around a ton, but it's a really lucrative way to force equity in the property and perform the refi and roll strategy and get your capital out and get it working again. So certain things that will help set up that value add is either mismanaged properties where they haven't raised rents in years, or their expenses are through the roof, or maybe they haven't renovated their units since when it was built. So those are a few key things that I look for. And we like to have a 15% rent upside. So we want a substantial amount that we can raise the rents. And it's the more narrow you set your criteria, it gives you more focus, and you're always tweaking the criteria. It's not you set it in stone and you set it and forget it. It's always changing. And with coronavirus, we're not looking for huge value adds where we have to, put 20K per door, because things are uncertain right now. But things that are certain is, are the rents way below market rent? And is that something you can increase?
Got it. So when it comes to the deals itself, can you talk about what you currently have in your pipeline at the moment and the strategies that you use to source the deals?
Yeah. So right now I'm sourcing deals a few different ways. The main way and most conventional way is brokers. So just, common strategy of just building relationships with brokers and just staying in touch, checking out their deals, underwriting. I know people that have taken 180. I know one guy took him 180 deals to find one deal. I know people that took 2 years to find one deal. So it's more of a persistence and consistency thing of staying after the brokers. But yeah, the brokers are the main source for my deal flow right now. There's other creative strategies that I haven't dove into just yet. There's a lot of strategies like direct mail, cold calling owners, pulling lists, and just cold calling and sending out mailers. That's something that I'm thinking about getting into, and I'm strategizing a little bit right now, and I'll have more to share in the future. But But yeah, I would say that my main strategy right now is brokers.
Got it. Got it. So you mentioned that you kind of have your own personal network with a net worth of people who have, that's possible for them to kind of invest in your first deal. And you mentioned you can go beyond 10 to 30 units and up. So but while you scaling your business at the same time, I'm sure you're going to be looking for additional capital for people to invest in your syndication deals. So what approach are you going to take when it comes to raising capital? Is it going to be word of mouth, or is it going to be through some marketing techniques? Can you talk about that?
Yeah, so capital is one of those things where you need it for the deal. Yes, there's ways to get creative, but at the end of the day, you need capital. Now, on my side, and for people listening, although capital is needed, it doesn't need to be you that brings the capital. That's something that's big, and I think that a lot of people starting out kind of get scared of, like, oh, we need $1 million. You do need a million, whatever the amount of money is. You're gonna need the amount of money to close, but that doesn't mean that has to be your money. So, a few ways that I'm able to kind of attract the capital. So first and foremost, what I was talking about before is having that network already, and that's mainly through the mastermind group. So again, when you're in a community with people who are looking to invest in deals, already have that mindset, you're already getting to know, you already have that relationship. It's kind of just a matter of getting that right deal and making it happen, because they're in it for a purpose, and the whole goal is to team up and take down deals. So that's kind of the immediate strategy. As far as additional capital from outside investors for syndications, for larger deals, all that kind of stuff, I take the approach of attracting capital. So a lot of people take sales and money raising as pitching people, as that type of avenue. I see it more as attracting capital, and the ways you attract capital is literally just sharing your story and documenting your progress. So ways that I've been able to attract capital and already start to build my investor list is simply by networking, by telling people what I'm doing, by posting on social media, by just building that brand and showing people that I'm active, that I'm in it. It gets people curious, and instead of me pitching them and having them put their guard up right away, I have a lot of people asking me, "Hey, what are you doing? What are you missing? I have X. Do you need? Is that something you need?" So I take it more of the approach of attracting capital, and that's simply just by showing everyone what you're doing, and that's social media, that's networking, and just talking openly.
Got it, got it. So the question is kind of talking about, the raising capital process. Something that I wanted to ask, if we just imagine the situation where there's maybe, let's say 60 unit deal and you need, let's for instance say $6 million. I don't know, and you have 5 million, so you need to raise 1 million just in case, right? So, and you have the people that are lined up for that deal. And again, the question is kind of, what is the right number of people that you should have? Because again, the process, what you're going to do, I'm just thinking, you're going to start raising the capital before you actually have a deal, right? So
Yep.
how many people you should have lined up if you need, as an example, that $1 million? Because some of the people, they're not going to invest for whatever reasons, because they're in the time when you were looking for a deal, they invested in some other deal, so somebody just came up for them. So what will be kind of this number of people that you should have, like, let's say if you need $1 million to raise?
Yeah. So I think that a general rule of thumb that I hear a lot of experienced syndicators use is you're going to want double the soft commitments that you actually require. So let's just say I need $1 million. Get $2 million worth of soft commitments where people will say, yes, when you have a deal, when you have this type of deal, count me in for 50,000, count me in for 100,000, whatever the number is. So a rule of thumb is double that, because like you said, people invest in other deals. People don't like your deal. It's not the right time for them. There's a million things that come up, and that's why it's important to overshoot it by double. Some people say more, some people say less. it all really depends and how well you really know your investor base. But definitely is a good idea to overshoot your number. That way, people are going to be dropping off.
Got it. Got it. Great advice. Thanks for sharing, Bailey. Appreciate it. So talking about the podcast, because I mentioned that that's one of the ways, again, to build a network and kind of to show your process and progress, while building this business. So can you talk about the Real Estate Investing Made Simple podcast, which, by the way, it sounds like something that Grant Cardone does, similar by the name. So can you talk about like what approach are you taking in building the podcast? Are you taking the same approach as we're doing right now, kind of having conversations with other people who are in the business? Like, what is the approach that you're using in the podcast?
Yeah, so I started the podcast to this is how kind of all started. I realized that I went 19 and a half years of my life not knowing a single thing about real estate investing. And once I learned about it, I thought it was the greatest thing that everyone should know about. So I kind of made it my mission to share all the conversations that I was having with people and those conversations that got me so excited with other people. And that was the main first goal of the podcast. I wanted to make sure that I was doing my part in educating people, because I think people, and I've talked to people that are 50 years old, 60 years old. I know people who still don't know anything about real estate investing, which is totally okay. And not everyone needs to be in real estate investing. But I think that people at least need to know that real estate investing is an option. And I personally believe that everyone should have at least a sliver of real estate one way or another in their portfolio. So that was the start of it, bringing on people to help me share the message and bringing on experts and people that have been in the industry for much longer than I have to share their experiences, to share their stories. And with the title Real Estate Investing Made Simple, I wanted to make topics simple, as easy as that sounds, but I wanted to take different ideas on all ranges of real estate, because I didn't want to just focus on multifamily, because like we mentioned before, there are so many strategies, and I don't think that every single person needs to have multifamily in their portfolio. I think everyone just needs real estate, and I think multifamily being my favorite asset. But one way or another, it was the fact that I believe everyone should have some piece of real estate in their portfolio, and I wanted to make it my mission to share all that I was learning with everybody else.
Got it. And that's a great mission to have, so that is awesome. You should definitely, guys, go and check it out. The podcast, the link is always going to be down below. But the other question that I have for you is, again, part of it, like the entire real estate game, in particular, multifamily, it's a team sport, right? So can you talk about, again, I know that you have a great team on board, Marco and Hadar. So, but can you give some, tips for people who are watching? Like, how do you look for those partners? How do you know the partner is going to fit your business? And how do you put that team together?
Yeah, that's a great question, and something that I did without really knowing it in the beginning, but retracing my steps, I found some really important things that anyone can take away. So we talked about the networking piece a lot before, and I just gave one strategy about the meetup groups, networking with those types of people. So that's basically how I found my mentor and how I was able to kind of get involved and get the ball rolling. But the whole point of it is, mentors are people, right? Partners are people. So to find people, you need to be networking. And that is just, you need to be in the game in order to play, right? So I wanted a mentor back in the beginning. I didn't exactly know how I was going to even get a mentor. I didn't even fully understand what a mentor was. But the fact that I was just in the game, putting myself out there, networking with people, learning about people, seeing how I can add value to people, it kind of made its way. And there's a quote, and I'm going to butcher it, but when the student is ready, the teacher will appear, something like that. And I didn't understand what that meant. until I realized that I was ready because I was putting myself out there and just eager to learn. So kind of going through the exact way I found it, my mentor was first and foremost networking. I got recommendations from people to go check out different meetup groups. No one said, "Hey, check out this guy for your mentor." I wasn't telling everyone, "Hey, I'm looking for a mentor." Not that that's right or wrong, but that's not what I did. I just told people I am eager to learn. I want to learn and I want to network. I'd love to know your recommendations. And they would say, "Hey, check out this meetup group, check out this podcast." And just from being in the game, I found the mastermind group that I was mentioning before. And from the mastermind group, that's where I found my mentor, who was Marco Barbaro, like you mentioned. And that's been huge. And then building the other pieces of the team, joining something like a mastermind group, or just going to meetup groups, because you don't need to join a mastermind to be successful or to form a team. That's just the way that I know how to do it. So that's kind of what I'm sharing now. But joining that mastermind group, having that mentor, and when you're surrounded by those people in that group, you see who you click with, you see who has the goals that align with you, who has similar visions, who has where you want to invest, a bunch of these factors. You just kind of find out who aligns with you and who you can see building a long-term relationship with.
Got it. Got it. That's a solid advice. Thanks for sharing that. So, I mean, it's phenomenal. I love, again, I'm gonna come back to the point what you said. 20 years old, like you're on the right track, to build the business, and it seems like you're in the right place because, again, there's a lot of people at your age who are still lost, like they don't know what to do, where to invest, because there's so much information available. So I'm very happy that you clarified a lot of things when it comes to real estate investing. How do you choose your own niche? Like, what do you do to build a network, and how do you build a team? And that's exactly what I want to do for you guys and girls who are watching, is to be part of Bailey's team. And I want you to go in contact with him personally, to ask him these great questions, because there's more to cover. But again, the show time is just limited. So Bailey, question is for you, like where people can find you when it comes to social media.
Yeah, absolutely. And I would be more than happy to connect with anyone who reaches out. So please do if you're listening to this. So the main way, LinkedIn, that's a super simple way. One thing to note, and this is just a quick networking tip, like as we were talking about, make the invitation a little personalized so I know who you are, because I'm sure many of you guys as well get a bunch of LinkedIn requests, a lot of random. So just throw in a little, "Hey, I heard you on Beating Alpha podcast," and that'll just let me know, "Oh, okay." And right away, I'll be responding to that. So LinkedIn, Bailey Kramer. You can also check out my website, baileykramer.com. Those are probably the two main ways and to connect.
Got it. Got it. Awesome. Awesome. So make sure you guys go and do that. Of course, all the links is always going to be down below. And Bailey, I really appreciate the time today. It was a great fun to get to know you, get to see your journey. What you're currently doing. In the business, and the way you're looking. To invest. So that's awesome. So again, guys, I encourage you to go and connect with Bailey. This has been episode 90 with Bailey Kramer. So I hope you enjoyed this episode. Make sure to share it with a friend. And as always, I'm going to see you in the next episode. Thanks for watching.